When you say you like banks, is it because they have not participated? Is it because of interest rates coming out? What is the logic here in buying banks? Because if economy slows down, which if it could, because globally things are slowing down, then is it a good idea to buy into banks?
So, part of the reason is that you're absolutely right that they have not participated in the last 2 years, despite their profitability improving and being at historic high. Their balance sheets are probably better as a sector than they have been in the last 25 years. In addition, I think the other important factor for us is that there has been a lot of concern about slowdown in banks because of lack of deposit growth. And I think that was more the manifestation of the tight liquidity that the central bank had been running because of concerns on inflation, because of the concerns on global cost of capital. And even as we don't expect meaningful rate cuts this calendar year, we think RBI stance on liquidity is changing, and that will start to feed through into better deposit growth. So I think that will bring back some confidence into the banking sector. Of course, in terms of earnings momentum, we agree with the consensus that earnings momentum for the banking sector will be lower. Both because margins are coming off a high and credit costs are moving up from uh, 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 below normalized level, right? So I think on both those counts, you will see moderation in earnings growth in the banking sector. But given where the valuations are and given the fact that concerns on deposit growth should ease, given the liquidity support from RBI, I think banks can do well.
Ashish, morning. Wanted to also get your take then as to what the outlook is when it comes to the mid and the small cap indices in terms of the kind of valuations that they are commanding. What's your sense as to where they're headed?
Sure. So I think the way we are looking at the market is really a market cap agnostic. So we are looking at stocks not necessarily just in the buckets of which market cap category they are, but as I mentioned, it is more to do with what is the valuations relative to the growth expectations. And on that basis, across market caps, we find opportunities. Yes, certainly multiples for the mid and small caps is higher than large caps. But if you look or compare multiples across similar growth expectations, then I don't see as much valuation difference between mid, large, and small. So a large cap which has 20% plus earnings growth expectation for next 2 years is also not available at 20 times earnings. So I think on that count, we actually don't find too much differentiation across mid, large, and small. There are select opportunities in each of the segments, and generally speaking, stocks are expensive across all three segments.
Okay, fair enough. That's the view coming in on the broader end of the market. But in the meantime, as well, wanted to also get in your take as to where it is that you're seeing earnings growth picking up. Are there some individual pockets that you believe we could see some incremental earnings growth?
Sure. So I think consumption is one theme that lagged the recovery, particularly the mass consumption segment post-COVID. I think we are seeing a cyclical pickup starting to come there. So over the last 2 years, primarily we were seeing growth only in the top end of the consumption basket. And since the last 4 5 months, we have started to see some degree of signs on broad-based consumption pickup. So even if you look at the automobile sector, it's interesting to know that two-wheeler sales are starting to do better than passenger car sales, right? If we look at FMCG commentary, we are hearing about rural growth now outpacing urban growth. So I think we are seeing some cyclical uplift in that segment. On IT sector, there is a bit more confidence coming in for some verticals like BFSI, that demand outlook is stable and starting to pick up. But we are not really seeing a broad-based recovery in IT sector growth trend just as yet.
Right. Okay, Ashish, great to have you today on ET Now. Thank you so much for taking the time out and speaking with us.
Thank you. My pleasure.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.